So with Bitcoin oscillating between 59K and 64K, we're going to see how that is affecting MSTY by taking a look at MSTR. And then I also want to take a look at ASTS and CRDO, as I did sell a put on each one of those. Hello my friends, this is Legend. So as you can see, Bitcoin here has just been oscillating between this 59K and 64K. We did come up above it, and I was hoping that we were going to stay above that 64K right there, but we ended up breaking back down, and that created that 64K to be yet another resistance line. And as you can see, it got rejected right here on 6/22, and then came all the way back down to test this 59.2K. It's been bouncing off of it and somewhat respecting that 59K, and it looks like in the last couple of days it is actually bouncing off of it. So hopefully we're going to move back up and try to test this 64K yet again. And eventually, one of these times, it's either going to break out of this 64 or we're going to break down below that 59K. Who knows which one's actually going to win, but I'm hoping that this is the move up and we can break above that 64K and hopefully get Bitcoin moving back on up to help with MSTR and MSTY to move on back up. And speaking of MSTR, let's just take a look to see how it's been doing. And here we are on MSTR. And as you can see, we have been just coming down, right? And a lot of that's just because of this right here. Look, if you can see Bitcoin coming down, and then we look at MSTR coming down, right? It does play a big part in MSTR, which is strategy. And as Bitcoin is coming down, MSTR has a way of moving down along with it. Now, we did end up breaking this $100 mark right here, and I was hoping that we were not going to necessarily break below that $100 mark, but we did, right? We ended up coming as low as $81 right here before starting to move back up. Now, that $100 mark is now going to be our resistance line, right? Because our candles are under that line. So that is now the resistance line. We really need Bitcoin to move up so we can get MSTR back above this $100 mark and hopefully moving back up closer to that 150 range. And this line here, if I were to zoom back, you'll see back here at around February, we did get down pretty close to it, right? We got close to that $100 mark, but it never really got down below it. But recently we did break below that $100 mark and actually got as low as $81. But I do contribute a lot of that due to the fact that Bitcoin has been moving back down and getting back down to this 59K right here. So if Bitcoin can move back up, we should see MSTR starting to move back up. And of course, if we have MSTR moving up, what are we going to see with MSTY? Well, we're going to see MSTY moving up as well. Now, it is currently gone down the same as MSTR right here. Look at this. Very similar in the charts. It's been coming down since around May. And if we look at MSTY, it's been coming down since around May as well. So as MSTR is coming down, MSTY goes down. And as MSTR here starts turning back up and starting to move back up, we're seeing the same thing here on MSTY. It's starting to move back up as well. Now that's one good thing that I do like about this new strategy that YMAX has taken on, because as the underlying moves up, so is the high yield ETF. Because just on Thursday, you can see it moved up 5.97% on MSTY. And what did it move up on MSTR? It moved up 7.9%. That's a great move on MSTR. That's 7.9 versus MSTY at about 6%, right? 5.97, 6%, pretty close, right? So it is capturing a lot of that move up, and that is a positive thing in my books. So if we can get MSTR to start moving up, I think we're going to see MISTY moving up as well. So I'm looking forward to that, and I know you are as well. Now, one of the two puts that I did sell right before the close of the day was on ASTS and CRDO. I sold puts on both of those, and by selling the put, that means that I earn premium. And for ASTS, we had a red day, and it was a bit lower than this when I sold that put. And if I take a look at my order here, you can see there's the ASTS. I sold a put for July 17th, and it's a $70 put. And that means that if the stock were to get down below $70, then I could be assigned those shares. So my contract says that I am willing to purchase those shares at $70 if that price of the stock gets down below that price. At any point that price is under that $70, I could get assigned those shares. It does not mean that I will, it just means that I could. But for doing so, I do get paid a premium, and that premium is cash in my pocket. And in this case on ASTS, I made $1.85 per share for 100 shares because each contract is worth 100 shares. So I have to be willing to buy 100 shares at $70 per share. But for doing so, I earn $1.85 per share times 100 shares is $185 that I made on Thursday. Now this does have an expiration date of July 17th. So that means that contract is good until that day. And if that price does not get below 70, then this will or could just expire worthless. Let's just take a look at the options chain just to show you that put that I selected. And we'll just take a look just to see what is it worth now. I got paid $1.85. Is it higher than $1.85 now, or is it lower? Because I did get this one, as you can see, about 30 minutes before close. Okay, so there was some movement in the price of the stock, but probably not a whole lot. But let's just take a look at the option chain just to see what it's showing now. So here we are on the options chain for ASTS. And the strike that I had selected was at July 17th. So if I open this one up, and I had a $70 strike. Now this is a put, so I want to look on this side of the chart because this is the put side. Now that $70 strike is at roughly $1.58. So as you can see, I made $1.85. And if I look at that options chain, that midpoint being $1.58 means if I were to turn around and if I would have bought that option back 30 minutes later, then I could have actually bought it back to close, right? Buy to close at $1.58, and I made $1.85. So therefore I make the difference. And that's $1.85 minus that $1.58. And that means I would make 27 cents times 100 shares. That would be $27 in just 30 minutes. I could have actually closed it and made $27, been out of the trade, and I didn't have to worry about anything at that point. But I did not close it. I am looking to keep that one a little bit longer because I like to get about 80% of that premium before I close it. Sometimes a little less, sometimes a little more. It just really depends. But I just wanted to show you that even just in that 30 minutes, I could have closed it and actually made about $27 on that trade. That's pretty sweet. But as that time does start dwindling down and getting closer to that expiration date, and if that price of the stock continues to stay at this 85 or even moves up, then this $1.58 will decrease, right? And that means that I would only have to pay back even less amount to close that trade. I've already made $1.85. This here now to close it is just how much do I have to pay out of that $1.85 in order to close it. So the lower this number becomes, the less I have to pay out of the $1.85 that I've already earned and that difference being what I actually would clear at the end of the day. So I hope that makes sense. But as you can see, the closer you get to that actual price, this premium actually increases, right? So if I saw a very strong support, say at 80 bucks, then I could actually have sold a put and made $455 per contract, but I would have been obligated to buy those shares at $80 if I was assigned those shares due to the fact that the price of the stock would drop below that $80. So anytime the price of the stock drops below your strike, you could get assigned at any point at that time. But most of the time, you will not get assigned early. Probably 9 times out of 10, you will not get assigned early. It will normally go all the way to expiration unless there is an event like earnings or something like that that is coming up. And anytime you have that, then you could easily get assigned early, or even a dividend, right? If you have a sold call, meaning you're willing to sell your shares at a certain price, and if that price goes above your strike, then you could get your shares taken away because the buyer on the other side of that trade may want those shares so that they can gain that dividend. Now, in the case of ASTS, does not have a dividend, and I feel that a $70 strike is pretty safe. Not guaranteed, of course, and none of this is financial advice. But at a $70 strike, that delta is only 14%. Now, definitely take that delta with a grain of salt, right? Because that delta will change as the price moves. So that delta really, honestly, is only good for the moment you're looking at that stock for that strike. But at that $70 strike, I did end up getting that $1.85. And since the price of ASTS is moving up since the point that I bought it, then you can see that if I were to buy it back, I would have to pay even less. And that just means that I keep that difference, which increases as the stock price increases itself. And if we're looking back at the chart again here for ASTS, let's take a look at that 5-minute chart, because that price of ASTS must have increased just after I sold that put, right? Because if I got $1.85 and it's only worth $1.58 now, that means that price of the stock had to have increased in that last 30 minutes of the day. So let's just take a fun look at a 5-minute chart right here, and let's just see if it did or how much it did move up at the end of the day. So we'll slide right over here. I got it around that 4:30 mark, and that's right here. So if you look at that, it came down, and when it came down, that price of that premium started increasing. I earned that $1.85 at around here, and you can see that price started moving up, and therefore that contract price started decreasing. And as it decreases, I can actually buy it back and then keep the difference. So you can see right here, this is why that contract went from $1.85 here to $1.58 here, because that price increased. So I just wanted to try to show you the correlation between that premium that is being shown versus the actual stock price here. And the last one that I sold a put on was CRDO. And here we are on CRDO. As you can see, we did have a red day. It came down. It dropped 6.6% or $17 on Thursday. Now for this one, I didn't get as much cash on cash, meaning I did not earn as much premium compared to the amount of cash I put up for it. But I'm looking for CRDO to be somewhat of a quick trade. I'm hoping to get in and then get out when we get a nice little pop up, get out at around 60 to 70% of the premium that I actually earned on CRDO for that sold put, capture that and get out. But of course, if it does come down, then I might be in it for a little bit longer, because the put that I did sell on CRDO is also for July 17th. And if we look here, you can see there's that CRDO put. I sold a put at a 170 strike for July 17th, and I earned $2.30 times 100 shares, or $230. And that's just for holding it 2 weeks. CRDO moves pretty fast, and I'm hoping this pops up and I can lock in about half of that, right? Because I got paid at $2.30. But if that price of CRDO moves up quick, then that premium to buy it back could be in half, right? So if this drops down to a premium of, say, $1, I can buy it back for $1, even though I made $2.30. That difference is what I actually earn, right? So $2.30 minus $1, that's $1.30 that I would make in just a matter of a few days. Now, that's not what I've actually made yet because I just got this one, but that's what I'm hoping for. I kind of wanted to give you my thoughts on that one. So if we look at the options chain on CRDO and we go to that July 17th, you can see right here is the actual price of CRDO, right? Now I sold a 170. So you can see right here, there's that 170. Now this is a put, so it's this side of the chart. And that 170 put, that mid price is about $2.22. So this one here looks like it's pretty close to about what I actually earned on this trade, because I earned $2.30 and now it is worth $2.22. So I'm only about 8 cents in the good for this one. But just like the previous one, I got into it right toward the end of the day, right? Only 30 minutes left of the day. So both of these are very new, but I'm hoping to lock in some of those profits when the price of those stocks move up. So that's what I've done over the week, and I wanted to give you an update on that. But one thing I do want to show you is that spreadsheet that I was talking about a couple videos back, and that's my selling put options spreadsheet right here. And if I wanted to punch in the ASTS just to see if it is indeed meeting that 3% that I'm looking to make and hopefully making per month, if I were to calculate that out for a full month for the gains, right? So if I were to enter that in to this spreadsheet, let's just see what that actually would project out for the month. So this one was opened on 7/2. The ticker, of course, was ASTS. That expiration was 7/17, and that strike was $70. The premium that I did earn, that was that $1.85 right there. So let's enter that into the spreadsheet. And here we go, $1.85 for that premium earned. And how many contracts? One contract for this example. Now I have 3% because that's what I would like to make. Sometimes you make less, sometimes you make more, but that is my goal, right? You got to have a goal. So once I hit enter, let's see if indeed I meet the goal down here. And boom, yes, I did meet the goal. If I were to project this premium out for the full month, that would be equivalent to about a 5% earned money per month. That's awesome, right? I was only looking for 3, and this is actually projected, calculated out for 5% for the month. That's great. Now, if I wanted to only get that 3% at any point, if that premium, and that's at $1.85, which did drop to $1.58, remember? But if it drops down below 74 cents, as you can see right here, if it drops below that 74 cents, that's actually going to provide me with a 3% calculated projected monthly income. So if I set up in my stockbroker app to actually buy this one back to close at something below 74 cents, say 70 cents, right? So if I set to actually buy it back, if that premium hits 70 cents, then at any point that it dropped and it hit 70 cents, it would actually buy to close, and I would be out of this trade, and I would make the difference between the 185 and the 70 cents, right? And that would be $1.15 that I would actually earn for that trade. So let's just say that we actually buy to close this one on 7/8, okay? Now remember, this was about 5%, right, for that calculated month. And we're going to say on that Wednesday, it actually jumped up in price, which caused that premium to drop. And we know that we had that set to buy it back at 70 cents. We're going to say that happened on Wednesday, and that premium difference would be $1.85 minus 70, and that's $1.15. And that would be what we actually made within this time period, right? Now, how many contracts did we have again? That was just the one. So that 5% all of a sudden now becomes 7% on your money. Now, that is crazy. But I just wanted to show you visually what I'm talking about if it did indeed get up in price to the point where you could actually buy it back before the expiration, and then what would that actually calculate out to? Because even though you got paid that $1.85, you have to pay 70 cents to close it early, so you actually only earned $1.15, which in essence actually increases the percent that you actually earn for that time period. Because before, when this was 2 weeks out, we had 5%. Now it's only 7 days out and we got 7% because we got out of it earlier. Therefore, we're making more per day. Now, what's the main reason why you would get out early? Well, 1, it reduces your risk. 2, if the price of ASTS drops again, you can jump right in and do it again, right? Rather than waiting for that last few percent, why not go ahead, get out early, take that premium, lock in those gains, and then wait for that price to pull back yet again and do this all over again, right? So rather than waiting 2 weeks, you might actually be able to do it twice instead of just holding it for that full expiration. Not guaranteed. And sometimes that doesn't work out for you. But that's the reason why I would be looking to get out early. Because ASTS moves so much, it may pop up one day, I can buy to close, lock in those premiums, and then the next day, it can fall right back down to where those premiums are getting juicy again, and I can sell another put. So anyway, that's what I've been doing this week. Wanted to give you an update a little bit on MSTY, along with the puts that I sold on ASTS and CRDO. And anytime that I can sell a put or sell a call and make money, I'm definitely going to try to do that because I love selling my puts and calls. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. As always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.